Oh goodness, that's a small screen. So weird how stuff changes between one video and the next. All right, my name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms. This video continues my teachings and my um, strategy using closed-end funds. If you want the full methodology on our 12 steps to financial freedom, then head to Facebook and check out my group there called Navigate Your Finances, where I give you the entire structure and framework for free. So normally I have this not scripted info, but like this really long framework of kind of the intro for a video for this video where I talk about the market space and maybe the macro market space and all the different goings on, but not today. Uh, One, it's late. Two, I'm tired. Three, I mean, my my body's sore from collecting a truck bed full of pecan one today. But market wise, not much has changed. I mean, there's little goings on here and there, but overall, not much has changed. Most people are still hoping for the Fed to cut rates. Um, One group even went full circle. 2 months ago, it was, you know, we think the Fed's going to cut rates 6 times this year, and yesterday's email was, well, what happens if they don't cut rates at all this year? So no one really knows. It's just a lot of speculation. If you look at the rate system as a whole, the Fed will say, look at our annualized data. Inflation's great, and everybody else says, look at my grocery bill. That's a crock of crap. Um, Grocery fees are still up, gas is still high. Like all the stuff impacting you and me still says inflation is a lot higher than the Fed would have you believe. So that leaves us with the same system, right? Like everything else, all the stuff that I normally talk about at the beginning of the video, all of that is still much the same. So quite honestly, why talk about it again? Now, maybe next week would be a great time to review it, but not this week. So instead of all of that, we're still going to use the same strategy to cherry pick funds, and we're still going to target the same short list, uh, overall short list of categories: bonds and senior loans, energy infrastructure, so oil, liquid natural gas, utilities, transfer companies. We're going to look at data and data management. We're going to look at real estate, and then convertibles and preferred yields. So all the disclaimers before I get into that, all the disclaimers are in the description. The biggest of note is that this is completely won't say uncensored, but it's not filtered. Like this is not edited and revised and sent off to some who knows shop out of Fiverr. This is all just regular content, live video filmed in my house. Um, so let's get into this. Um, Share screen. So this is the full closed-end fund list. And without teaching closed-end funds and going through all of that, um, we're going to sort by discount. We're going to sort by target. All of this is newly updated as of yesterday. And all of these bear significant discounts. Um, they're not significant in relation to each other. They're significant based upon the individual pricing. It's like, what is this? But yeah, it's significant as to the pricing of the individual fund, not in relation to the other funds. So we own the funds in blue. I track for any number of reasons the funds in green, and the funds in purple are recommended by other people for any number of reasons. So let's see. It's a lot of data still. So let's filter this based upon, actually, let's figure this based upon category. We want monthly payer. Let's filter this by yield. I'm going to reverse yield per. I like bigger numbers at the top. So our premise has been 9% and above. The only exception I'll make is this one because it has the greatest discount. I mean, you're essentially getting it at 50% off. So that's like saying for every dollar invested, you're paying 50 cents instead of a dollar. So that leaves us with this shorter list, right? This is more manageable. So uh, senior loans, well, floating rate loans, but senior loans, plus their own closed-end fund portfolio. I'll let you read this. I don't want to read them all. These are sister companies. You can argue for and against my strategy buying sister companies, which I will, quite honestly, my goal was to make a video detailing our current funds inside our portfolio, which is this tab, and talking about what I've learned really in the last 2.5 years between being a new investor and being a seasoned investor, what funds that we have earmarked for sale and why we've done that. But that's not today. Uh, New bond fund, interesting bond fund, all corporate bonds and all American bonds. So the these are, I mean, as you can read, it's a global fund, so it fluctuates in pricing. Fluctuates more than straight all U.S. bonds, and I like the idea of an all U.S. bond fund. Um, we're at the we're at the outset of the next AI boom, and this fund has been just an outstanding performer. For our side of things, we bought it when it was sub 10. So to buy it now, I would want to buy equal shares. So 50 share. We have 50 shares. I would like to buy 50 shares. And then we're essentially, I mean, we're cutting our profits in half. Um, but it's it's on the list because it's technology based and not outright. Uh, See how to say this. It's technology based in how they're invested. They're invested in firms that do a lot of cloud management, a lot of data management. But for us, it's not a great buy because of how much it's grown since we bought it. But I put it on the list for your benefit, just so you could see where it was in comparison to what you might have already had. And then this one stays on the list because, gosh, that discount is insane. So if we look at the short list of options, so bonds or senior loans, right? So we have these two, and even these funds. Uh, this transition from bonds into real estate. This has some bonds to it. So the strategy overall is it's it. So bonds or senior loans if you can get them cheap. Energy infrastructure, oil, liquid natural gas. Sorry, I'm watching a cat peer into a trash can, but uh, oil, liquid natural gas, energy transfer, utilities. Uh, and then you look into real estate, preferreds, convertible, all that stuff, right? So I mean, outside of this company having some funds of utilities, the normal funds that we have, like KYN or NML, don't meet our strategy on how the targets are based. Like all of these funds have, let's see, so funds that have been around for a year or ish. This has been around for about a year. This has been around for about a year. The current discount is not as steep as the initial discount because that discount window started crazy, like crazy wide, and now it's closing. So that initial average of how steep it was, we're buying that closing discount. So it's still a really great discount, but it's not the traditional double the historical discount versus these funds. The historical discount is premium. The 5-year average is about 6.5. And the strategy, normal strategy is we're looking for something that's double the historical and greater than the 5-year. But on a newer fund, that strategy changes a little bit because it doesn't have the same track record as a longer lasting fund. So all of these, we're getting a really great buy based on the discount we're getting as it compares to that individual stock's history. Um, but it's where would we buy in the current market if we were going to buy tomorrow? So, excuse me, what I keep track of all of our funds. Maybe HFRO is 250 now. HFRO is 250 now. So where would we buy? Well, we're not buying tomorrow, but of where I'm looking long term is I'm looking here long term. An outright bond fund company that's solely based in the US, regardless of how you think the economy is doing, regardless of how great or how poor you think the Fed is doing. I like the consistency of having a bond fund only based in one company or one country. That appeals to me. Um, all of these funds overall, I think, are great funds. Um, they're all great intros into the current market, and they do set up well in the future, regardless of what happens. They fit, like all of them fit our metrics. Uh, they're all triple targets. They're all insane discounts. They all have above 9 yields, except for this one, but it's got the steepest discount, and they're all monthly payers. Uh, the holdup on our end is quite honestly is this other video I need to do, and not so much the video itself, but what would be contained in the video. It's the funds that we're selling off and why. Like my goal is to get rid of this company, which sounds really bad because if you see the ticker, it's like, why would you sell that? But what I've learned, and I mean, we learned it early, but at the same time, what we've learned is I I like cash in hand dividends. Like this is your reward for owning this company. Here it is in your account. Spend it how you want. Versus this company and this company are automatic dividend reinvestments. So overall, them reinvesting your dividend back in the company lowers your overall uh, share value in a way. It like that's our locked in price, but it's also it's you could argue it's lowering that over time, um, but and it improves our overall return of investment based on the partial shares we've got, which I can prove this easy. If I take the partial shares away, you can watch that return of investment. I mean, it improves our stats in that regard, but I like cash in hand dividends. I would much rather get $20 in our account that I can roll forward or hold and use the way I want, as opposed to $20 in something that I don't really want more of. Um, and that's the same thing here. I want to get to a point where we have the initial strategy was buying discount and having monthly payers, but also quarterly payers that pay consistently based on those quarters. Uh, and that's changed as we've gone on to where I'm okay with not having quarterly funds, but I would be interested in keeping funds, like especially these two, that pay consistently quarterly, but also pay consistently well, that raise their dividends, that are great in the short run, great in the long run. But like this company has, like their dividend has gone like this, where we bought it here and it's now here. Um, this one has been choppy. It was recently bought by Aberdeen, who's not my favorite company in the world. They raise their dividend, but it's the same idea. It's an automatic dividend reinvestment. So I get paid the money and then they take the money right back. And that's just not my style of investing. So on our end, the goal is to sell these partial shared automatic reinvestment programs and then recycle the money into a monthly payer, which if all of that was already set in stone and ready, we're still buying based upon our strategy. We're buying based upon target. We're buying based on the market now, where we think the market is and where we think the market will go. Um, and we're still buying within those individual categories, both for the long term or for the short term and the long term. But it's just not set up where we could buy tomorrow. But if we were buying tomorrow, I would buy here. Um, NBXG, like it's great. Like, yes, it's on the list. It's a technology based company, it's technology infrastructure. It's set up really well. It pays a consistent dividend. I wish they would raise it. Uh, but even without them raising it, the value continues to go up. We bought it just under 10. I honestly don't, it's that it's going to continue going up, I think, yes. But at the same time, I don't want to buy it. I don't want to buy it on the top end of things. And I think at some point, technology is going to stutter, uh, catch any uh, hot movement or hot topic in the market. And at some point, it stutters. And depending on how bad the stutter is, maybe it drops, maybe it levels. I don't know. But I would much rather buy that on the stutter and not pay full price for it. Now, I get that we're buying it on a discount. Yes, we're getting, 84 cents instead of a full dollar for every share. I get that. But I would rather buy the stutter on that and not buy it when it's popular versus bonds are still, depending on the market. I mean, bonds are getting hotter. Um, Real estate is uh, like everybody's hoping real estate does well, but it's still not the best market to be in, which you could argue for purchase. You could argue for picking up more of that because um, I mean, real estate is still down. But for us, of where we would go and what we already have, uh, we would go with that. And then, depending on what else we sell, then we would look at the strategy and look at the structure and look what we had week to week, and then make that decision. Then it's really hard to speculate. I mean, if we can speculate based on this, what say like the top four, top five funds off of here would be for the next 4 weeks. But it's really hard to speculate going forward just because the market does tend to shift a lot. Like it 2 weeks ago, really great. Last week it was okay, right? So just because the market does tend to swing, makes it really does hard to anticipate, we'll say like the top five picks for next weekend. But I digress. So if we were buying tomorrow, that's what we would buy. Um, yeah, the close second would be to pick up another 50 shares here. So those are my picks for the week. And overall, it's a really short video. Um, let's see. So, if you, yeah, I hate to be choppy. It's just, uh, it's not, it's just, I hate to be choppy. I'm tired after a long day. So, uh, let's see. And there's more background noise going on, which is distracting me. Um, so if you like the content, consider subscribing to my channel. Hit the like button. Head over to Facebook and join my group there called Navigate Your Finances. And this is going to be a, I don't want to say it's going to be an off week, but it's going to be uh, both a harder video week, but also a uh, off schedule video week. On the teaching end of things, it's spring break, so our schedule is different, and the day-to-day schedule, just the overall schedule, is different, which means I'm going to have to do things differently in order to get the videos I want to film, the videos I want filmed for the week. So next weekend's video, uh, I'm pretty sure I'm going to do a review of our portfolio. I need to do a review of our portfolio, but I'm pretty sure I'm going to do a review of our portfolio, the stuff we want to sell, and why, and just updates within our portfolio, and then use that as the weekend video because I don't know where we'll be next week. We're hoping to be out of pocket. God willing, we're hoping to be out of pocket, and I don't want to have the stress of making a crash video that weekend. Um, so we'll see. We'll see. Um, but I still plan on doing a Wednesday meme review. Um, I do a video on Thursdays on Facebook that I will pre-record. Uh, Next weekend, I will probably review our portfolio and then try to get into filming for next week, just to decrease the overall stress over the weekend. I'm really curious what our cat is kicking around the kitchen. Um, yeah, so whatever you have planned for the week, I hope it goes well. Wherever you are headed, uh, if you need some advice, if you want a different take, if you want a different view, then head to Facebook and look at my page, Adaptive Perspective, Navigate Your Finances, and take a look around and see what you think. And if you want help and want to talk to somebody, really just talk about the overall game plan, then send me a message and let's see what you have in mind. Regardless of where you are, regardless of where you're going, you are the captain of your ship. So captain your ship and captain your journey. That ship will go wherever you lead it. And if you have no idea where you're going, it's going to be really hard to reach that end dream that you're trying to find. So if you know where you are, you know where that dream is, yes, you can pilot your ship that way. If you know where you are and you have no idea where you want to go, it's going to be really hard to reach what you want to find. And if you have no idea where you are and kind of know and really no idea where you want to go, then you're more likely to just kind of navigate in circles and not make any progress. So pilot your ship, captain your ship, and whatever you have planned for the week, and even whatever you don't have planned for the week. I hope it goes well and I hope you make progress. And this is Daniel Young signing off. I'll see y'all on another video. Bye bye.